Good morning and welcome to the Rainbow Rare Earths Limited investor presentation. Throughout this recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company will review all questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. And I'd now like to hand you over to George Bennett, CEO. Good morning.
Good morning. I hope you can hear me well and clear. I'd like to welcome you to another investor update on Rainbow. We've had quite a lot going on since I last presented to IMC, and it's all been very exciting for Rainbow. So with no further ado, I shall carry on. Usual disclaimer. Thank you. So this slide was my last presentation. It presents the Phalaborwa base case in terms of our financial metrics. This was published as part of our PEA in October last year, and once again it highlighted what a robust project we have in Rainbow with the Phalaborwa project. And since then, we've done a couple of other things. You see where it says strategic asset. We did a capital raise at a 30% premium to the market price at the time. The cornerstone investor was TechMet, who are funded by the US government via the DFC, the Development Finance Corporation. And this, I think, speaks volumes in itself, that we now have the US government through TechMet as a 12% shareholder in Rainbow, and we will be looking at further investment from the source in the US. Once again, we have very robust economics in our PEA. But the technology that is very innovative, we've been able to extend this further to signing an MOU with Mosaic in Uberaba in Brazil, and I'll talk about that later. And then as the last sort of key point there is the experienced team. I've covered this in previous presentations, and some more information on our experienced team that's delivered many times in the past is now an appendix to this presentation, and you can look at it at your leisure. Very importantly, on Monday this week, we announced the MOU signed with Mosaic. Mosaic is a US-listed multinational. They've got a $12 billion market cap, and what we've been able to do is sign an MOU to jointly develop the Uberaba project in Brazil. Now, Uberaba is a very large phosphate producer. They mine phosphate, hard rock phosphate from a carbonatite, similar to what Phosphor mine in Phalaborwa. They slurry it down to a phosphoric acid plant, and they produce phosphogypsum, very similar to the process that we have that was carried out for 60 years at Phalaborwa in South Africa and run by Sasol. As I said, the phosphate slurry feed that Uberaba mine and produce is in a similar nature to what we experience at Phalaborwa. And in our initial desktop work we did on this opportunity, we know that the grade is similar, if not higher, than Phalaborwa's, and the rare elements of a similar makeup to what we have at Phalaborwa. And just to stress, Phalaborwa has a very high basket of neodymium praseodymium, above 29%, which is one of the highest in the world, and it's got very strong commercial credits in terms of terbium and dysprosium, which are very important, these two heavy rare earth elements. We basically are going to collaborate with Mosaic to do the test work, which is already started at SGS Laboratories in Toronto, very well known, worldwide recognized laboratory with lots of rare earth experience. And basically we're funding the work program, the drilling program we'll have to undertake on this stack at Uberaba, as well as the PEA on the 50/50 basis. So you can understand where we are going with this project. I might add that the Uberaba stack is significantly larger than what we have at Phalaborwa, so it's a very exciting opportunity for Rainbow. We expect it will be a similar low capital intensity to Phalaborwa compared to other hard rock rare earth projects. It'll be resilient to the pricing environment that we see, and I'll go into that more later. And very importantly, the phosphate mine that's feeding this phosphoric acid plant at Uberaba is a life in excess of 25 years. So it's a very, very long life project that Rainbow now finds itself jointly developing with Mosaic in Brazil. Also, very importantly, we've consolidated our ownership at Phalaborwa by doing a deal which was very, very accretive in terms of NPV for Rainbow. We have paid $5 million to take our interest from 70 to 85% in the Phalaborwa project in South Africa, and we've got a call option which we'll exercise at our leisure to take the other 15% based on VWAP of the price of Rainbow in October 2023, and then so we will fix the number of shares that we're going to issue for the balance of the 15%, but we've got up to 2 years to exercise this. And the reason why we're going to take 2 years, we just want to make sure that we've got all the permitting in place and so forth before we finalize our last 15% call option. So it's a very, very strategic stake. It's been done in a very strategic manner. And as I say, we raised $9.5 million on the market recently at a premium of, as I said, about 30%. And it demonstrates that we've got strong backing from the market and also very strong backing by TechMet, which, as I said, is funded by the US government. TechMet came in for $7.5 million of the 9.5, and we were able to raise $2 million from the balance of other shareholders who are very supportive of Rainbow. For the investors on this interview who are not sort of familiar with the rare earth market and with the Phalaborwa story or the Rainbow story per se, as we know, key building blocks for the net zero sort of target that we see for 2050 is basically electric vehicles, solar and wind power. Now, wind power generation, which has been rolled out aggressively over the next 20 odd years, requires a huge amount of permanent magnets in their drives, and these permanent magnets are made up about of 3 megawatt wind turbines got 2 tons of permanent magnets in it, and about 600 kilograms of those permanent magnets are made up of neodymium and praseodymium. So a very, very important part for permanent magnets and wind turbines. Electric vehicles like a Tesla or a fully electric vehicle takes between 3 and 5 kilograms of permanent magnets. And once again, you've got a very high percentage of neodymium and praseodymium required in these permanent magnets, not only for, as I said, for electric vehicles, wind turbines, but all consumer electronics today make up 50% of permanent magnet demand, and the defense industry also requires permanent magnets. Not only do you require a large amount of neodymium and praseodymium, you also require dysprosium and terbium in smaller quantities. These protect the permanent magnets from losing their power through heat. And, electric vehicles generate heat, wind turbines, and certainly missile guidance systems, when they're flying at high speed through the atmosphere, they generate lots of heat, and you need dysprosium and terbium to protect the properties of the permanent magnets. So also a very, very important part of the 4 permanent of the 4 rare earths that are required in the permanent magnet industry. And as I mentioned, consumer electronics, your handheld drills, your cell phones, your earpods, your drones, your electric scooters, electric motorbikes, all these things require permanent magnet motors, and they all require rare earth elements in them. So the demand outlook is very, very robust. As I mentioned earlier, dysprosium and terbium are small but vital components of a permanent magnet, and we see the importance of DY and TB growing in the world right now. I was at the Rare Earth Conference in Barcelona just 3 or 4 weeks ago, and was very apparent how dysprosium and terbium have been recognized as being very, very important going forward, because of China has only got 10-year life reserves left of these 2 rare earth elements. So with the Chinese only having 10 years of mine life left, you realize how critical other sources of these 2 rare earths are becoming. And basically, there are no facilities separating dysprosium and terbium outside of China in the world right now. Lynas are currently building a plant in the US to separate their dysprosium and terbium that they mine in Australia, because even currently, even though Linus themselves separate neodymium and praseodymium, the heavy rare earths being dysprosium and terbium are actually currently being separated in China and then moving this separation to the US. But right now, there's nobody else. Rainbow will be one of the few companies in the world that will separate all four of these rare earth oxides, separated oxides outside of China. As you can see, what our production forecast of these two key elements will be is plus minus 100 tons of dysprosium and plus minus 40 to 50 tons of terbium. Even though these tonnages look small, very, very high value and very important in the global sense. Once again, this highlights these two key rare earths, dysprosium and terbium on this chart. You can, it's supplied by McKinsey. A severe imbalance is dark blue on this chart, and moderate imbalance is slightly lighter blue. As you can see on the magnets, dysprosium and terbium, they're colored in dark blue, showing a severe imbalance that they're predicting, and neodymium and praseodymium is in a milder blue, but also a moderate imbalance, which we're all aware of, is occurring in terms of forecast supply and forecast demand. Going back to this chart now, where we're looking at a supply deficit of 27,000 tons forecast by 2032, and this is supporting the increase in the price of the Palabora basket. Well, in other words, we see rare earth prices rising consistently on average over the next 10 years. We have seen a price pullback in 2022 and 2023. This is after a spike in 2022 driven by massive rollout of wind turbine generation in China, which slowed, but that wind power turbine generation is going to pick up its forecast towards the end of this year and going into next year and continuing, as well as forecast demand growth for EVs. And that's why you see a pickup in rare earth pricing, as well as, so that translates into a pickup of the value of the rainbow basket made up of those four permanent magnet rare earths. For first time viewers of the rainbow story on this webinar, over here in this slide we have the rainbow project at Palabora. As you can see, those two stacks there are the gypsum stacks that are plus 30 million tons of gypsum with associated acid water on top. Now, in the top right-hand corner of this photograph, you've got an old phosphoric acid plant that was been mothballed in 2014, and that was originally largely run by Sasol until it was sold to Boswell Phosphates, who we did our deal with, and they ran it for 2 years, and then it was closed down in 2014. And very importantly, next door you have the hard rock carbonatite phosphate mine that produced a concentrated phosphate slurry. The rare earths which were present in the hard rock carbonatite weren't an economic value to mine just for themselves, but because they were now concentrated up in the phosphate slurry and pumped next door, they fed the phosphoric acid plant there. Phosphoric acid is required for the fertilizer industry globally, and what Sasol did was the key ingredient to add here was sulfuric acid and heat in the production of phosphoric acid. And in the various stages of phosphoric acid production, you finally created a gypsum residue, which was pumped onto these two stacks, and the rare earths deported with the gypsum onto the two gypsum stacks in the waste residue. The slight yellow discoloring, you can see it at the very top on the right-hand side of this photograph, is the old sulfur stockpile. This sulfur stockpile fed the sulfuric acid plant on site. Now, the reason why I'm mentioning this is because these stacks sit in what's known as a cracked chemical form. Now, all hard rock rare earth projects have to mine with crushing and, first of all, drill and blast. Then you have to haul to a process plant where you've got crushing, you've got milling to crush, to take the crushed rock into almost sand or powder form. Then you have to, through a flotation process, produce a rare earth concentrate. Once you've got a rare earth concentrate, you have to crack it into a chemical form. And to crack rare earth concentrates into a chemical form, you need two key ingredients, sulfuric acid and heat. And this has taken place already at Palabora. And therefore, we have a cracked chemical stockpile, and we were able to go straight into an acid solution with using sulfuric acid to leach the rare earths out of the gypsum, and then go into the next stage, which is to go into separated rare earth oxides further downstream than most rare earth projects go. Lots of rare earth projects in the world stop at either just producing a mixed rare earth concentrate, or they stop at producing a mixed rare earth carbonate after the cracking stage, or mixed rare earth sulfate, or mixed rare earth salt. Because Rainbow started with a cracked chemical stockpile, we said, why must we stop at a mixed rare earth carbonate? We're going to go further downstream to capture 100% of the value and produce a mixed rare earth, separated rare earth oxides. If we only stop to the carbonate or sulfate, we capture 60% of the payability if we stop to that point. But because we're going all the way to separated rare earth oxides, we are now capturing 100% of the payability. So once again, you can see that this is a low capital intensity project, below $300 million, and that's basically the price, the capex footprint at September last year. We will be doing an update of the PEA capex for this ahead of the release of our definitive feasibility study, which has already started and is well underway. And our target for our DFS is March 2024. Finally, just to have a look at our OPEX. As you can see, our OPEX is very, very low at $33.86 per kilogram. This is the lowest in the Western world. We are aware of this, and we believe it's even lower than Chinese cost of separated rare earth oxides, which puts us in a very, very strong price. And against that basket price in our PEA, you can see this is driving our EBITDA margin of over 75%, which is a fantastic EBITDA margin for any mining project, or any project for that matter. We look at the rare earth supply chain, as I've been talking about it, just to give some more color to it. As you can see, we start with mining, then you have to produce a rare earth concentrate, then you have to crack it, and only once it's cracked, you can then take it into a mixed rare earth carbonate, or mixed rare earth sulfate, or mixed rare earth oxide for that matter, and then you go into the separation stage. Rainbow starts with this cracked chemical stockpile, so we are going to produce a mixed rare earth sulfate, and then we're going to go to do the final stage of separation and produce the 4 separated rare earth oxides that are very important for permanent magnets. After that, we have to supply a facility that takes it into metal and alloy, because once you've turned it from metal to an alloy, you then feed a permanent magnet manufacturing operation. And this is where there's a big bottleneck in the world right now, which is metals to alloy and then magnet manufacturing. Now, the West is very, very focused on rolling out these steps in the strategic supply chain to create this supply chain outside of China. And we see the German magnet manufacturer, for example, called VAC. You've entered into an agreement with General Motors in the US to build a mega factory in the US, and they are looking at also expanding their magnet manufacturing facility in Germany. But they have announced the rollout of their new magnet manufacturing in the US to feed General Motors in the US. Now, there will be a Mountain Pass or been spoken about as being able to feed metal and metal to this plant, metal/alloy to this plant. But we know Mountain Pass are running quite late. And Rainbow, we believe, will be able to produce separated rare earth oxides to feed one of these facilities in the very near future. And the fact that we are considering doing the back end of our separation in the US, similar to what Linus are doing, will create a very, very real presence for Rainbow in the US. We've got that flexibility. It's come about because we've split our pilot plant between doing the front end to produce a mixed rare earth sulfate at Mintech in South Africa, and then shipping a mixed rare earth sulfate to the US, where our pilot plant is currently undergoing construction at KTech in Florida. And then there they'll do the separated rare earth oxide, similar to what Linus are doing, but on the commercial scale. Currently, we're doing it at pilot plant scale, and then we will make a decision whether we want to do the commercial front end in South Africa and the commercial back end in the US. And we'll be making announcements on this shortly. Once again, Rainbow's using a new technology to separate the rare earths out of the mixed rare earth sulfates. It's called continuous ion exchange and continuous ion chromatography. It's very tried technology. It's continuous ion exchange is used in uranium plants all around the world. And myself and the Rainbow team, in our previous life as MDM Engineering, where we were part of the MDM Engineering, we designed and built 2 uranium plants. So we're very, very au fait with using continuous ion exchange and process plant design. And then continuous ion chromatography came about. The guys at KTech invented CIC and continuous ion exchange, and they also invented continuous ion chromatography. Now, this is used worldwide in other industries, food, biotech, phosphate mining, as well as the chemical industry. So it's a tried and tested process, but we are, for the first time, we'll be using it at commercial scale to separate the rare earths that we are looking for out of the Phalaborwa feedstock. So very, very exciting. It's a much lower capital intensity, much more environmentally friendly process compared to continuous solvent extraction, which is the de facto way for separating rare earths, used by the Chinese, used by Lynas, and will be used by Mountain Pass. But we are going a slightly different route, which has been proven at bench scale and lab scale, and our pilot plant will be the final step of proving that our final stage of separation is totally de-risked when we produce separated rare earth oxides out of the pilot plant in Florida by the end of this quarter. So very, very exciting time for Rainbow. I might add that there's a new company in Norway called Retech, which is also using a mixed rare earth carbonate to produce separated rare earth oxides, and they're also using CIC. So, Rainbow will be, I think, the first doing it on a large scale commercially, but it's interesting to note that Retech and Norway are also going this route. As you can see, these are photographs of our pilot plant at Mintech in Johannesburg. This front end of the pilot plant's already been commissioned. We'll be producing the first stage, which is a mixed rare earth sulfate, out of this pilot plant once again in this quarter. And that, as I say, is the de-risk stage for Rainbow. Because the mixed rare earth sulfate is using processes that are tried and tested. They're conventional processes in the rare earth industry. We're using, we're neutralizing the acid water. We're using it to wash the phosphogypsum. We're producing a gypsum cake. It's then going into an acid solution, which will leach the rare earths out of the acid solution. Then we go into continuous ion exchange, which is well proven to remove the fluoride. Then we do what's known as the silica precipitation. Then it goes into another acid leach, and basically we then go into a SARB, which is a strong agitated acid bake, to produce a mixed rare earth sulfate. The SARB process is used in many rare earth projects around the world. So once again, all the front end of this is tried and tested, proven technology, and we will produce a mixed rare earth sulfate, which is 60% payable. So that de-risks Rainbow as it sits, and then the final separation will take place in Florida, in our pilot plant there, to prove 100% that our process all the way to separated rare earth oxides are completely de-risked. Here's the pilot plant in Florida, currently under construction, and this is on target and on budget to be complete at the end of July, and it'll be ready to receive the mixed rare earth sulfate from the front end being created at Mintech shortly thereafter. I think this is a new slide which we haven't shown to this forum before. It's a very, very powerful slide. As we know, rare earth prices have been under pressure starting sort of last quarter of 2022 and into the first half of 2023. And I said at the time when I published the PEA for Phalaborwa that we would be resilient to pricing shocks in the rare earth market, and my prediction was actually almost came true, where I said we could withstand a 50% drop in rare earth prices and we'd still be very, very profitable. Well, rare earth prices have come down by about 40% and they've started climbing slowly. But if you look at the left-hand chart there and also on the left-hand side of that chart, you'll see that value of 78.46. that's the Palabora basket, which is below spot at the moment, so spot's higher. But at the value of that basket, Rainbow would still generate about $80 million of EBITDA per annum. And that's very, very significant, because I don't think there are many rare earth projects in the world, if any, that will produce that kind of EBITDA margin or even EBITDA at current pricing. And then we see as the basket price rises, Rainbow's average EBITDA increases strongly. Our OPEX stays very, very low because it's more or less fixed. And we see very, very strong returns for Rainbow. So if we look at that price of 216.54 for the Rainbow basket, this would generate about $300 million of EBITDA, and that would be at circa 2029 forecast pricing, that Rainbow would be able to produce $300 million of EBITDA. But that's looking at conservative pricing. If we look at where we see pricing when Rainbow is expected to be in production, which is 2026, the first stage of production, we're looking at $120 million of EBITDA, and as we ramp up into 2027, we're looking at $300 million of EBITDA in 2027. If we look at forecast pricing at 2032 and then steady state, we're looking at EBITDA numbers of around about $450 to $500 million of EBITDA in 2032, which is not that far away in terms of the life of a project. So these numbers footprint Rainbow's opportunity, and very, very, very significant upside for Rainbow, even from very depressed pricing we see in rare earths right now. But all the forecasters, these are not Rainbow's forecasters, but one thing about rare earth forecast pricing is everyone's forecasting pricing to go up. Unlike a gold forecaster, a gold price forecaster, you'll have some guys who will call the gold price up to $3,000 next month, and some guys will be calling gold down to $1,500 next month. That's the nature of forecasting the gold price. But one thing is very, very apparent with rare earth pricing forecasts is that because of the thematic and the structural underpin of demand for permanent magnets and the rare earths that feed those permanent magnets, everybody confirms that prices are going up. It's just which forecast you want to take into your financial model. But under all forecast pricing scenarios, Rainbow is a very, very profitable business based on Palabora, and we have the opportunity now to replicate this with what we have in Brazil. Just to cover the ESG credentials once again, we know it's a brownfield site. We're using water in a closed loop. The water we are receiving is from those gypsum stacks, so we're going to neutralize all that acid water, which right now stands to be an environmental risk. So we're cleaning up that environmental risk. We will be redepositing the clean benign gypsum on a line stack site to IFC and Equator Principles standards, and we'll also be entering into an agreement shortly to sell part of this phosphate gypsum into the South African gypsum market. We will be, as I said, recycling the water, and any discharge will be totally benign. We are also using sulfuric acid from a nearby sulfuric acid plant. In fact, when I say nearby, I'm talking about 1 or 2 kilometers away from the Palabora mining company. It's a big copper mine. They have excess of sulfuric acid to get rid of every month. It's circa 10,000 tons a month. And at Palabora, we're going to be requiring between 4,500 and 5,000 tons of sulfuric acid per month. So we've got ample sulfuric acid as a waste stream from next door, and that's fed into the OPEX of our PEA, because when at the time of our PEA, our price that we were indicated we would receive from Palabora was $95 a ton. Just to footprint this, Glencore, who are mining copper in the Congo and need sulfuric acid, we're paying $450 a ton for sulfuric acid. So that just shows you how competitive our sulfuric acid, which leads into our financial metrics of Rainbow. And also we're going to be using renewable energy. There's a gigawatt of renewable energy being commissioned in the Northern Cape in South Africa between wind and solar that's been fed into the grid. There's 2 licenses have been issued in South Africa to wheel this green power off the grid, and we are already in negotiations with one of those license holders, and we've got an agreement that we'll be able to wheel the power that we require off the grid at Phalaborwa, and we're only going to need about 10 to 12 megawatts of power, very, very low. A normal mining project, your power cost would be about 50% of your OPEX. At Phalaborwa, we will be below 20% of our OPEX for our power. So once again, just shows you the green credentials of this project. When I have a look at where we are, we've had strong progress since the fourth quarter of 2022, and by quarter 3 of 2023, all the work streams for our definitive feasibility study are underway, which I think is key. We've also been able to increase our project pipeline. As I mentioned, the MOU signed with Mosaic on the Uberaba project is very key. The reason why I say this is very key is because the Uberaba project is almost a copy and paste of the Phalaborwa project. It's hard rock carbonatite mining. It's producing a phosphate slurry, feeds a phosphoric acid plant. The phosphoric acid plant requires sulfuric acid and heat to generate the phosphoric acid for the Brazilian fertilizer market, and then they produce the gypsum waste residue, which sits on a massive stack at Uberaba. Very importantly, they produce their own sulfuric acid at Uberaba, similar to what Sasol did in South Africa. That means for our plant at Uberaba, we'll have a very, very cheap source of sulfuric acid to feed into the OPEX number of this project. So this, I think, the fact that we were able to sign this with an or $12 billion company gives Rainbow's IP and technology a huge amount of credibility. And as I said, we're already testing their samples in Canada, and also because of all the lessons we've learned at Phalaborwa and the flow sheet we've been able to develop and all the tests that we've done, we know a large part of this will apply to the Uberaba project. Not all of it, because no 2 ore bodies are the same anywhere in the world. So the carbonatite, even though it's a carbonatite, it's hard rock, it will have different characteristics to the one in Phalaborwa, but a large part of our flow sheet will be applicable. So we see that we'll be able to progress this project along very, very quickly. We are also working with OCP in Morocco, but OCP, as I've always said, is and told the market, it's a sedimentary phosphate source of phosphogypsum that they're generating at Phalaborwa. It's very low grade. So we are looking at ways of being able to upgrade that phosphogypsum feed in terms of the rare earth content, and only then will we be able to do something with it. But that's a far slower project. It is progressing, as I've said, but it will be at a slower pace than Uberaba. So our focus right now is delivering Phalaborwa, which is a near-term, very, very high-value project, and in parallel, we'll be able to move the Uberaba project along relatively quickly because of all our knowledge that we have out of Phalaborwa. And also, lastly, the environmental process started by WSP Gold, a global consultancy, EIA consultancy, is progressing very well. I think key takeaways just on Phalaborwa alone, if we look at when we forecast to come into production in 2026, our NPV at a very conservative discount rate, post-tax discount rate, jumps to over $1 billion. We've got an IRR of over 40%. We'll be generating, as I say, circa $310 million of EBITDA per annum, and our EBITDA margin jumps to over 80%. So also, we've got a strategic advantage now. We've got the flexibility to be able to do the back-end separation in the US, which will give us US presence. Will start making us, I think, important to US investors who can start looking at Rainbow from that point of view. We know the US investors like anything to do with America, and the fact that we will be onshoring this. If we decide to do this, we would be onshoring this separation on US soil. We think will carry favor with US investors, and we've got a large amount of geographic diversification, which no other earth project in the world has, I might add. all rare earth projects in the world right now are single project companies, and Rainbow will be unique in the sense that we will have this geographic and project diversification of two low capital intensity projects, very low OPEX, that will be able to stand the vagaries of rare earth pricing, which we know most rare earth projects in the world will battle to be able to operate under trying rare earth pricing like we have at the moment. But even at these rare earth prices, as I mentioned earlier, as you can see back in our presentation, Rainbow will still be a very, very profitable company. So I would like to thank you for your attendance, and I will now go to questions. Thank you very much.
George, thanks very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But George, perhaps to start with, we did receive a number of pre-submitted questions from investors. So I'll read the first one here, which reads as follows. Please could you give an update on the Gakara project in Burundi, and what is the likelihood of it proceeding in the near future?
So Burundi is still on care and maintenance. It's a very, very low cost to keep it on care and maintenance for Rainbow. And right now we are just waiting to engage with the Burundi government. They just, I think 6 weeks ago, passed a new mining act in Parliament. And based on that new mining act, the government has said they would like to start negotiations with Rainbow. So we are waiting for that finalization of a meeting date. But I would just like to stress that it will be a fairly slow process, I think, in negotiating with the government, as is the nature of negotiating with governments. But there's no danger of Rainbow losing its license in Burundi, but it's also very, very small in the size of what we have in terms of Rainbow's overall sort of value as a company. To footprint Burundi right now in terms of EBITDA, even at full scale commercial production at current rare earth pricing, Burundi would battle to generate more than $5 or $6 million of EBITDA, whereas Rainbow would generate plus $80 million of EBITDA. And then we will be also looking at the opportunity in Brazil. So I think that speaks for itself.
Perfect. The next one here reads as follows. When the pilot plant is dismantled from Mintech, will it be reassembled? And if so, where?
So the pilot plant at Mintech, I might stress that it's Mintech's pilot plant. Part of the equipment has been purchased by Rainbow, but the majority of the equipment is based at Mintech. That's why we use in Mintech. They're a big R&D parastatal in South Africa with a world-class reputation, and lots of the equipment is there. So no, we won't be dismantling and taking it away. We'll only take bits and pieces that belong to Rainbow. But once again, we will be looking at doing another pilot program with the Brazilian opportunity, which, dare I say, when I say shortly, it would be fairly quick compared to when you find a new discovery and the time it takes that new discovery to get you piloting. We'll be piloting Brazil relatively quickly, and we'll be using part of that equipment for the Brazilian pilot. The equipment at KTech, that's all Rainbow's, and we'll take a decision on what to do with the final back-end separation pilot plant at KTech's offices or laboratories in Florida. But we haven't come to a final decision yet.
That's great. Thank you for that. Is Morocco still being considered / assessed, as you briefly alluded to in your recent interview?
I've just covered Morocco, as I said. We are busy with test work there. As I said, it's a much slower opportunity. We are assessing it. I've always, as mentioned, it's a much lower grade in the sedimentary phosphate deposit. So we've got some work to do there, and we are working with the UM6, which is the university in Morocco, as well as OCP themselves. And this is progressing, as I mentioned.
Perfect, that's great. Moving on to the final pre-submitted question. Your previous capital raises have been at a premium to the share price on the day, which is unusual for a pre-revenue junior miner. Have you achieved this, and what has been the benefits?
Look, I think we've achieved this because we've been able to convince investors that Rainbow has got a lot more value than what the share price is reflecting. and that's proven by the premiums to every raise I've done since I've been at Rainbow. I think the people who've come into these fundraisers at a premium are people who believe in the long-term story of Rainbow. They're not stags. You're looking for a 20% discount to the spot price and sell it immediately once they receive their shares through a raising. So we've been able to raise at a premium from people who believe in the Rainbow story, believe in the team being able to deliver that value that will eventually come out of Rainbow. So I think it's been very, very positive.
Perfect. George, that does conclude the pre-submitted questions, but as you can see, we've received a number of questions throughout today's live presentation. If I could just hand over to you just to read out those questions and give responses where it is appropriate to do so, I'll pick up from you at the end.
Yeah, so I've got a question here. What's the backup plan for the rare earth oxide extraction in the event of the Rainbow K-Tech technology not working? We don't have a backup plan because we know it works, to be honest. I'll be very blunt. We know the process works. But if you, for some hallelujah reason, the final separation didn't work, the front-end process, which we know does work, would still generate, at PEA pricing about $120, $130 million of EBITDA. So the front end, the front end part of Rainbow's process makes Rainbow a very, very profitable company. But as I said, the final back end we know works, so we don't have a backup plan. Next one is, does Rainbow have a K-Tech license for Morocco? No, we don't, but this is not apparent because Morocco bought the K-Tech technology a few years ago to separate uranium and thorium out of their phosphogypsum. So once again, as I alluded to, we know the K-Tech technology works. This is why OCP, who are the biggest generators of phosphogypsum in the world, bought their technology. But that didn't preclude OCP from signing a master agreement with Rainbow because of what we've done at the front end, which we've also been able to go into a patent application with. The next one is, what's the ballpark value to Rainbow should the Brazilian project proceed into operation? I can't answer that question other than you look at the Phalaborwa metrics and you look at the size of the opportunity in Brazil, and you can draw your own conclusions. But we haven't done the work yet, and any statement I made on this, I would have to get sign off from Mosaic. So at the moment, you can draw your own conclusions. But needless to say, this is a major, major opportunity in Brazil, and we would expect very, very good financials to come out of this, or financial metrics, I should say, to come out of it, as well as low capital intensity. Any other questions? Sorry, I see. Would Rainbow consider disposing of the Gukara project? I'm not at liberty to say that, other than we'll consider all our options once we are given the go-ahead to start remining in Burundi. Given the take from my presentation that we are focusing on secondary sources of rare earths now, that's all I can say. The next one says, how will you manage your ongoing power outages in South Africa? I think I've answered this partly with the fact that we are going to be wheeling green power off the grid. So we're not concerned about the power. Also, I might add that it's well documented that there are power shortages in South Africa, but what doesn't get documented is that the mines actually don't suffer many power disruptions, because the mines are, you can't have a mine losing power when you've got, mine workers 2 or 3 kilometers underground, and you need to bring them to surface. So the mines suffer very, very little power outages, and at Phalaborwa we would expect to see a similar result with our power. But as I said, we're not a big power draw, and if wheeling off the grid didn't work because the grid started faltering, we then introduced solar power ourselves. And Phalaborwa is one of the hottest places in South Africa, so we'd have very, very good results if we put our own solar power plant, which would be circa 10 megawatts, which is not big by anybody's standards. Would you look to list on the US market? As I mentioned, we've got the flexibility now to onshore part of our separation on US soil, and that would then we would then have to consider that. Yes. Any other questions? When will the DFS be complete? This will be, our target date is March 2024. And then after the completion of the DFS, we will go into financing discussions. And the intention is to hopefully be able to start construction in the last quarter of 2024 for our process plant at Phalaborwa. I might add that the DFC, which is the US government, have indicated to Rainbow that they would be happy to look at being a project funding partner, in other words, a debt funding partner for Rainbow. And as I said, they are already invested in Rainbow through Topco, where they own 12% of Rainbow. Would I list on the JSE? No, I wouldn't at this stage.
Okay, George, thank you very much for that. I think you've addressed those questions you can from investors. And of course, the company will review all questions submitted today and will publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to the company, George, could I just ask you for a few closing comments?
I think I've covered most things for the investors, hopefully. We, as I said, we are making very good progress since our last presentation. The pilot plant is going along very, very well, both at Mintec and the build in Florida. We expect to get these produce a mixture of sulfate, as I said, within the next couple of weeks. The next few weeks, I should say, will be this quarter, and we will also be able to have the separated rare earth oxides by the end of this quarter out of the plant in Florida. So we've got two massive de-risking steps for Rainbow. But as I said, the first step is, in my mind, is already de-risked, because there's no doubt that we'll produce a mixture of sulfate, which makes Rainbow a very, very profitable company in its own right, just based on the 60% payability of the sulfate. But as you know, we're going all the way through to separated oxides. So I think the future for Rainbow looks very good, as well as the exciting MOU with Mosaic in Brazil. Well, it's Mosaic in New York, actually, but it's a project in Brazil, which gives Rainbow lots of credibility for the marketplace as well. Thank you very much.
Perfect, George. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of Rainbow Rare Earths Limited, we'd like to thank you for attending today's presentation, and good morning to you all.
Thank you.